I made this one. Welcome back to my YouTube channel. Today we're going to be diving into a topic that is crucial for your financial health, and that is going to be the importance of credit. So whether you're just starting out or you're just looking to improve your financial situation, it's always good to understand credit and understanding that credit is key. So without further ado, let's get started. Alright, so what is credit? So if you're just starting out, like I want to say, like you just turned 18, or like you're already an adult, I want to say, first things first, you need to understand what is credit. So in simple terms, credit is just basically the ability to borrow money or access goods or services with the understanding that you'll pay it later. You'll pay it back. So this can include like loans, student loans, credit cards, uh, service agreements. Service agreements can be like your phone plan, phone bill, something like that. But just being able to borrow money and they will know that you're going to pay it back. So having good credit is key because you can basically, the more higher your credit score is, the more amount of money that you can leverage, you can access. So you want to have a good credit score. You don't want to have any negatives on your credit score because that will affect the amount of money that you can access. Why is credit important? Good credit can basically open many doors for you. So it can affect your ability to get a loan for a car or a house. It can even influence your job opportunities and also impact your ability to get insurance rates, higher insurance rates. So essentially, your credit score is like a financial report card that basically tells lenders how reliable you are. That's basically it. So, building a good credit score. Now, a good credit score can save you money through lower interest rates. So, the higher your credit score is, the lower your interest rates are. And then, as I said earlier, higher approval for like $20,000, $50,000, $30,000, all that stuff. So, a lower interest rate could save you tens of thousands of dollars over time and over the life of your mortgage. So, yeah, you want to have a very, very, very good credit score. In fact, that is for me, that is the key of what you should have. You should have a very good credit score. So, how credit scores work? So, credit scores typically range between 300 to 850. So, the max you can get on a credit score, the max your credit score can be is 850. The lowest is 300. So what affects your credit score? We're gonna get into that next. That can be payment history, and I think that's like the biggest factor of people's credit score. Make sure you always pay your bills on time. That can boost your credit score. Number two is credit utilization. So this is going to be the amount of credit that you're using compared to your credit limit. So you want to make sure that you keep that below 30% at all times. Right. So I would say number three is the length of your credit history. So that would be like 15% of your um, history, your credit score. So the longer your credit history, the better. It shows that you're keeping up with your credit score, you're keeping up with your bills, you're paying everything on time, and you're using your credit wisely. Number four can be types of credit, can be like credit cards, mortgages, and loans, and that can be very beneficial because banks, they want to lend out more money to people that has a lot of products that are I want to say like they they have a lot of products with the company. And then I think this is number 5. Number 5 is going to be new credit. So opening several new credit accounts in a short time, that can hurt your credit score. So a lot of people do this because they try to open up a new account, then they want to get funded to like $20,000, $25,000, but that's going to be on your credit history forever, unless you get it removed. But that can really hurt your credit score. So you want to make sure you keep that low. Don't open up a lot of credit cards within a certain period of time. So next is going to be how to build and maintain good credit. So number one, always pay your bills on time. Always pay your bills on time. This is non-negotiable. So you can do this by, you can automate your payments. That's like the easiest. You can you can also set up reminders. And there's like also like softwares and platforms and services that will like take the money out of your bank account and directly automate it for you. So it's really no excuse to paying your bills on time if you have the money. Just make sure you pay your bills on time. Number 2 can be keep your balances low on credit cards. So you want to aim to use at least less than 30% of your available credit. It's going to be good. Number 3 can be do not close old accounts. So unless you have like a really good reason to close your old account, just keep them open to maintain your credit history length. Number 4 can be limit new credit applications. So each application can cause a small dip in your score. So you want to make sure you're doing all those for to build and maintain good credit. You know what I'm saying? It's like not. But the consequences of bad credit. This is like with that credit, you're basically done, in my opinion. So, like on the flip side, bad credit can make basically life more difficult. You might face higher interest rates, struggle to get approved for loans, or you can even have difficulty renting like a apartment. If you just have bad credit. So employers might even check your credit score for certain jobs. So that factors into the consequences of having bad credit as well. And I think that's kind of basically some of the consequences that I could think of. You want to make sure you're always checking and monitoring your credit as well. So it's important to regularly check your credit report. So you're entitled to a free credit report from each of the major credit bureaus. If you don't know what those are, that is Equifax, Experian, and TransUnion, once a year. So look for any errors, and if you have any errors, report them immediately. You want to make sure you get them off of your credit report as fast as you can. I think that's basically all I can think of right now. So really, there you have it. That is a quick overview of why credit is really important. So make sure you take these steps to build and maintain good credit. And if you found this video helpful, give it a thumbs up. Don't forget to subscribe for more financial tips. I'm going to be trying to post every Monday. And thanks for watching. And I'll see y'all in the next video. And I made this one.